a bit of pressure. But let's talk about HUL. It's the other stock on our radar this afternoon because of a couple of brokerage reports that have come in where, there is a little bit of concern about, of course, a slowdown in consumption, and the pressure that we could see on margins as well. So brokerages are cautious on HUL. Abneesh Roy, who tracks the stock very closely, joins us now. Abneesh, I think consumption patterns are slowing down. That's the narrative. Or, when you talk to most businesses across sectors, you get that feeling. But for HUL particularly, what kind of slowdown are you penciling in, and how do you think that would impact the earnings?
Yeah, HUL, thanks, will be a bit lower in terms of pecking order versus some of our top picks. We'll prefer Colgate, Godrej Consumer, Dabur, ITC, Nestle over a Hindustan Unilever. Hindustan Unilever clearly is facing the issue of very sharp inflation few quarters back, followed by very sharp deflation. This has led to a lot of the regional players coming back, say in detergents, etc., and even in personal care, some of the segments. Second, of course, is this is also leading to inventory destocking because there have been some price cuts. And because this time the festival season is also delayed, we are seeing that in some of the personal care, the demand and the supply has shifted more towards Q3, so slight impact will be there. Past few quarters, HUL, one good thing has been very sharp price hike. But if you see last few quarters, the price hike has been coming off. Our sense is in Q2, the price hike will be fairly limited. It was 3% in Q1. Our sense is it will be almost negligible in Q2. So due to that, definitely the sales growth will look optically a bit low because it is just pricing which is being given back to the customer. Of course, August 35% deficit in rainfall pan-India will obviously have some impact on the rural recovery which had just started. Due to all this reason, definitely HUL will see muted kind of Q2 results. Of course, H2 should be better because by that time, some of the inflation which has picked up again, that should start impacting the regional players which have come back, say in soaps, detergent, tea, etc. Last point will be on the GSK part of the portfolio where because of inflation in sugar, milk, etc., there is a margin pressure and the demand is also quite weak in the GSK portfolio.
Okay. Abneesh, since you are expecting a sluggish Q2, what exactly are your estimates when it comes to volume growth as well as margins as compared to earlier? And have you made any revisions to your full year EPS?
So still almost 1 month is left. So it's still early. But I'll say that if you see in Q1, we had 3% price growth and 3% volume growth. I would say that the volume growth will be ballpark there, but we need to wait for the 3 weeks which are still left. Pricing, as I said, will be almost negligible. But clearly, in terms of gross and EBITDA margin, we do expect slight improvement on YoY basis. Quarter on quarter, FMCG should not be compared because there is a seasonality element. Ad spends have picked up, but there will be gross margin expansion also, partially flowed back towards ad spend. So I would say that in Q1, if you remember, we had around 8-9% kind of EBITDA growth, PAT growth. I think ballpark we should be similar, but still, as I said, 2-3 weeks are left, so we'll monitor that also.
All right. Thanks a lot for that. Well, let's step into a quick break. On the other side, Manisha